Hi, thanks for tuning in. This is the ASX and Sectors weekly chart analysis for the week ending 16th of August 2024. First chart is the S&P ASX 200 index weekly chart. This is the XJO. The highs of the old range came through here. You can see the market made an attempt to break out, and weakness emerged almost immediately on these two bars. Although if you look at the volumes, they weren't particularly high. If I remember rightly, this weakness was due to overseas markets pulling back more than local weakness. Anyway, the response was that the market pulled back and tested for supply. It's a very elongated, almost a shakeout test for supply. But what was established was buying support. Came in at the lows of the range on an increase in volume, and that buying support then helped the market push higher in response this week and up to the new highs of the range, which are there just below the 8,000 level. So the market over the last 2 weeks has established that buying support is present, and there was a good response to that this week. You'll see that same theme in the other charts that are coming up. This is the mid-cap sector, and the same highs of the range came through here. And on this bar here is where the XJO originally broke out above this level. So you can see that it was lagging behind at this stage. The weakness emerged similar to the XJO, and the market pulled back in response. Buying support was established here. You can see that for sure. In response, the market has clearly pushed higher and has effectively made an attempt to break out here. It's now in front of the XJO. You would expect there's a good chance the market will come back to test this breakout for strength. It doesn't have to, but there's a good chance, at least at this point, probably a 50-50 chance at this stage, the market will come back at least somewhat and test this breakout for strength prior to any push higher in response. This is the small ordinaries. The same highs of the range through here. This is the bar the XJO broke out on. You can see this market is much more subdued than the larger two markets we've just looked at. But in a similar sort of way, the weakness came out here. Prices pulled back in response. Market established buying support at the lows of the range here, and prices pushed higher in response. The fact that those three markets all did a similar thing does help to confirm what you're seeing on the chart and across the market. This is the financial sector. This is the largest ASX sector by quite some way. You can see the market pulled back here and consolidated after a pretty good run higher. The market then broke out here in response. Then there was a period of bullish absorption through here before pushing out again and higher. And then that weakness emerged here in this market as well. Price pulled back in response, and then this week price has accelerated higher again and established a new closing high this week. Volume was very high last week, so this buying support that emerged really was quite strong in response to the weakness of the previous week. This is the metals and mining subsector, which are having a pretty tough time of it at the moment. You can see that the market pulled back to this level where previous support was found in the background. The market was really reluctant to break down here and attempted to hold on. And even the last 2 weeks have seen the market really reluctant to move lower. 2 weeks ago, the close was well off the week's low on an increase in volume. This is the market attempting to hold on. It's reluctant to break down. And once again this week, the market's closed well off its low and the close is back within the range of the previous bar. This is a market reluctant to break down. The underlying commodities prices are dragging it lower, are forcing it lower. It's had the opportunity to absolutely slice lower with real intent. It could have sliced lower like this, but it's not done that. It's reluctantly moving lower. It doesn't really want to move lower, but it's doing so because the underlying is dragging it down. This is the ASX gold sector. Here's the highs of the range. You can see the market just popped above the highs here before some weakness emerged and price came back in response. 2 weeks ago, similar to the broader market, there was buying support established adjacent to this consolidation zone here, and in response, prices pushed higher again and has closed just a fraction above this bar's high, where the market made a minor attempt to break out. So this market also looks poised to push higher given any sort of favourable trading conditions and the underlying price of gold, obviously. This is the ASX energy sector. It's been having a bit of a tough time of it as well. And this last couple of weeks, price has actually broken down. The market's been attempting to hold on. It's been reluctant to break down all this time. This really is a clear breakdown bar 2 weeks ago. And generally in response, you would get downside follow through, which would confirm the breakdown. But the market hasn't really done that. It's attempted to support. It's closed higher this week on an increase in volume. It's only a narrow spread, so it's a consolidation type response like this. But there's been no downside follow through in response. In fact, the lows of last week's bar weren't even tested at all. The market dipped fractionally lower and immediately found support. So although this looks like a breakdown bar, and it may turn out to be in the end, at this point the market's attempting to hold on, similar to those other markets that are a bit weak. The market's reluctant to move lower. It's had the opportunity to do so, and it could have really sliced lower in response, but it hasn't done so, at least not yet. This is the healthcare sector. You can see back here, there's the lows of the range. Here was a 2-bar reversal or shakeout. The market then spent some time in consolidation mode. Here was the highs of the range. The price broke out here, then spent 2 weeks testing for supply and absorbing any supply that's been drawn out. Prices pushed higher again in response. Some weakness emerged here, along with the broader market as well, and the last 2 weeks have seen price dip lower and recover quite strongly this week on lower volume, suggesting that the sellers are being absorbed and the sellers are possibly exhausted now, which would leave the market well placed to push higher given any sort of reasonable trading conditions. If selling pressure is low, the market will be able to push higher with relative ease. So this week's bar definitely has lower volume, despite the fact that it dipped quite a way lower, but it did recover to close up near its highs. This market looks well placed to push higher given any sort of favourable trading conditions. This is the industrial sector, and the market was respecting this level here for quite some time, but then price just dipped lower here and it was really reluctant to move lower. There was no breakdown bar, and despite the weakness in the market, price did not want to go down. It just hung here, waiting for a turnaround in the broader market, which it responded to positively very quickly. It moved up. Here was the weakness in the broader market we've seen previously, the pullback in response, established buying support, and price pushed higher in response to that. So this is another market trading in that similar way where the weakness was drawn out, mostly on overseas markets. Price pulled back in response, sort of in like a equal and opposite reaction. Buying support was established and the markets pushed higher in response. Back to the XJO just quickly to finish up. Here was the highs of the range and the initial breakout. Here's the new highs, which the market's pushed up to this week. I don't think this weakness was as bad as it looks. The price did pull back in response and establish buying support. The price has pushed higher and up to this level and looks primed to push higher, given any sort of favourable trading conditions. You may get a test for supply if overseas markets aren't ready to go, but given any sort of favourable trading conditions, this market would like to go higher. Okay, thanks for tuning in. Thanks for your time. See ya.